in a shutdown for several days. And the real key to that is going to be, I think, what happens early next week to see if a restarting of the government on the basis of agreeing with what the House has passed and we get back to normal. I would say it's 50-50 maybe, because there's also a lot of interest, including potential primary issues in 2026. If that were to happen and the government were to shut down during next week, then I think the main impact is to what degree will government spending be cut, because the administration has the power to cut spending as well as cutting employment, and Congress can do nothing about that. And I've read indications that this could be enormous, perhaps several $100 billion in government spending cut. And if that were to happen, then I think what we're looking at is, on the one hand, a potential recession, which could break the stock market, and on the other hand, lower interest rates, as the reduction in the deficit would encourage more people to say, well, I may go ahead and buy some of those treasuries, because the amount that they have to raise is not going to be as bad as we would have feared. So on the other hand, if the government is opened up next week, then I think we're looking at a situation where the potential, again, for increases in interest rates, perhaps past the magic 5% on treasuries, both short-term and long-term, could start to become apparent. And in that case, I would expect that we will go back to recommending things like shorting the 30-year T-bond and considering buying the puts in the SOFR. So that's it's a combination impact factor of shutting the government. I guess what I'm saying is we're holding back on making any changes to see whether the government shutdown continues only into next week, in which case we get back to where we were before in terms of enormous government spending, or we get the shutdown continuing into next week and then potentially some significant cuts in government spending. So that's about where we stand on the shutdown.